We have a packed schedule coming up in the week ahead, so I'll crack on. Watch out for the UK unemployment and wage growth figures on Tuesday the 14th and the latest inflation numbers on the 15th from the UK, while American inflation data on the 14th will also have economists, central bankers and investors on the edge of their respective seats. However, the main macro item of the week could just be the latest monthly US retail sales data. Not least because the prior set for the month of July were disappointing. Sales fell 1.5% month on month. So what, you might think? This is a messy data set right now owing to the pandemic. Moreover, retail sales in America are still higher than they were before the pandemic started in the first quarter of 2020. And it's pretty easy to argue that July's drops is due to the outbreak of the Delta variant stateside. However, take a closer look at this chart that shows the actual monthly retail sales figures in dollars. They peaked in spring. And it could be that spending's easing as stimulus plans are eased. Several individual states have withdrawn the enhanced $300 weekly unemployment benefit, and that's due to end nationwide at the end of September anyway. What will happen when the checks stop? What will happen when the rental eviction bans and mortgage payment forbearance schemes come to an end? They could perhaps drive a surge in employment as people have to go to work, say some. It could lead to a plunge in retail spending, say others. We'll find out. But following the retail sales numbers could give us an insight into what's happening on Main Street in America right now, even as Wall Street parties like it's 1999 and the headline American stock indices set record high after record high. If retail sales keep weakening, maybe the American economy is not as strong as many would like to think. And that could be tricky for the US Federal Reserve if inflation forces it to start thinking about raising interest rates. On the corporate front, we've a very long list of scheduled announcements from large, mid and small caps alike. Names which may be worthy of further research include the following, either for what they say about themselves, their industry, or big issues like input costs and prices, although do note some of these dates could yet to be subject to change. Primark owner Associated British Foods, property developer Henry Boot and Abcam on Monday the 13th of September. Ocado, JD Sports, Chemring, cybersecurity expert NCC, video games developer Team 17, and another property player Harworth on the 14th. House builder Redrow, retailers Dixon's Carphone, then Fever Tree Drinks, Tuller Oil and Trustpilot on the 15th. Construction players Kier and Galliford Try, as well as Wix and Hilton Food on the 16th. Before minor for Expo, retailers Superdry and One Disco round out the week on Friday the 17th of September, when shareholders in Smith's Group will get to vote on the proposed sale of its medical division and plans to buy back £715 million worth of shares with some of the proceeds. But the company which could just cause the biggest fuss in the week ahead is equipment hire company Ashtead. The FTSE 100 member is set to release its first quarter results on Thursday the 16th of September. The shares have continued their phenomenal long run over the past year, despite the pandemic and global downturn, and they stand at a new all-time high as I record this. Remember that Ashtead gets some 90% of its sales from its American Sunbelt operation, with the bulk of the rest coming from a plant in the UK. Perhaps one of the reasons the shares have done so well is hopes the US economy will keep humming along, buoyed by monetary stimulus from the US Federal Reserve and fiscal stimulus from Congress, even if the latter is still log-jammed on Capitol Hill in Washington, and infrastructure spending plans are at risk of being blocked by two Democratic senators, no less. Note how Ashtead's share price and the Institute for Supply Management Purchasing Managers Index for manufacturing seem to have a bit of a love-in going on. Now, as such, Ashtead's first quarter statement should be an informative one, and analysts and shareholders will look to two headline figures. The first is sales. On a stated basis, revenues grew 23% year-on-year in the fourth quarter of the last financial year, the first growth in 5 quarters. Analysts are looking for 10% sales growth for the whole year to April 2022, slightly ahead of management's guidance for an increase of between 6 and 9%. The second headline number is pre-tax profit. Profit more than doubled year-on-year in Q4 to end a streak of 5 straight decreases. Ashtead doesn't usually discuss dividends at the first quarter stage. Shareholders will have to wait for the first half figures that are due in December for that. But management may discuss the ongoing share buyback programme that was launched to the tune of £1 billion over 2 years back in May. Chief Executive Brendan Horgan may also discuss Ashtead's investment plans. Current guidance for gross capex in the year is £1.5 billion, slightly more than in the year before the pandemic. If management's feeling bullish on the outlook, it will look to buy more kit to rent out. Also watch out for any comment on pricing, equipment lead times and input cost inflation. And do note that Ashtead's switching from reporting in sterling to dollars from this quarter onwards. I hope that you and your families are in good health and in good spirits. Thank you for listening, and I look forward to talking to you again next week.